And welcome to the Breakfast Club. Sorry I'm a little late. It was a late night last night, so I had a nice little sleep in this morning. I hope you're all doing well out there this morning. Let's have a look at the NASDAQ on the daily. This is the daily chart. Let's get this guy here. We have relative equal highs here now. We've traded back into this breaker here. And we've come down and created relative equal lows on top of this daily fair value gap. See that yesterday came down, just tapped it. So right now, we're looking at taking out last night's or yesterday's high. We got relative equal highs from yesterday already. And we have relative equal lows below us. And again, equal highs above us. So if we just popped up above yesterday's high, and then we continue to run down, we get into the mean threshold of this order block, and then continue on the downside, taking out these low equal lows. If we take out the mean threshold of this candle, we're going higher. So if we're looking for 4 hour, that puts us right back into the fill of this 4 hour fair value gap right here. I want to see this one stay open if we're going to continue going lower. Now it looks like we are definitely even from yesterday. And then we have this 4 hour fair value gap below us here. I could see this running back up into here, filling this fair value gap, and either extending to reverse to go back down lower. Again, we don't want to see that one stay open. So right now on the 1 hour, kind of looking at this area right here. Watch to see that this provides a level of support. We have this small little pocket here. Even though we haven't taken out those highs yet, I look at this one here for more support to go higher. If not, if it closed below it, look for this low to get taken here. There's a small little imbalance right in here. Let's go 15-minute. And you'll see where the reversals start to happen. We've cleaned out this old high here, these old highs. See how the body trades below it, comes back, taps it perfectly. Again, that's all supply and demand, right? That's all volume. There's nothing algorithmic to that whatsoever. small little one here. We have another small one here. So keep your eye on that level there. You're between here and the discount raise below you here. 15 minutes. You look at this on 5 minutes. This is the 5 minute one. You trade below it. You trade right back up into it here with precision to continue going lower. How's that for perfection? 1 minute. I want to see this candle here get taken. This candle here get taken. So when you see this high, you look for this candle to get taken on the downside, and this candle get taken on the downside. You get one right here, trade back into it, come back all the way back inside it one more time. Looking to go in lower. That's on a 1 minute basis. Aim for equal lows. They're gone. Low taken. First fair value gap. Look at that. Okay, so we're still looking for this to go a little lower. It's going over one of Michael's videos last night. Close that off. Good morning, Lucas. Brazil. Welcome, welcome today, my friend. And Curryfish, hello. All right, let's go into some Bitcoin stuff. So we've got this high taken. We've traded below it right here. You trade back up inside it. That's the level you want to keep looking for right now and extending it. And watch how that all gets supported. See how we go through it, into it, continue going down. Looking for you to run below this low here. You come back up into it again. You've got equal lows now. Take those out. Reverse. Oh, there's probably a reverse down in here. You would have got taken out on that. As soon as it trades below, if this is the one you're looking for, if it trades below it, right there, you're on the wrong side. We're coming back down further. We have this here, trades below it, comes back, hits it perfectly here, continues going lower till it takes that low out again. You get another reversal here. Now that low is gone. Trade above it right there. You trade back to it right here, and then equal highs, reversal, takes out this guy here, you come back up. You've actually traded above it, so you wait till it trades below here again. And it trades right there, below that level. You trade back up into it, right there. Take these lows, reverse. You don't get a chance to get on it till it gets all the way back up to that reversal again here. That now it fills this. If you can't get in here, it fills it there. Comes back down into the lower. Takes the lows out again. Look for that reversal. You don't get the first one. You don't get the second one. You do get the third one. If they keep pushing through them, you got to get in whatever the last one was. Stop loss will be down below you here. Running for the equal highs. Wait for the reverse. Again, we didn't take that high out right there. We just became equal highs. So what we're doing is reversing back into this small range, little swing point here. Going higher. So see how we're working inside this large fair value gap here? Look at it, how many times we bounced off the consequent encroachment. Multiple times went through it. Finally worked the upper quadrant, and then finally traded back down at the lower quadrant. If you take this and make it into your 50%ers, %, see that? Right off that, continue lower. That's a beautiful work of your quadrants. All inside that fair value gap at the top. It's beautiful. Okay, this was what? Soybeans. We finally reached that level we were looking for yesterday. Hit it. Pop through that fair value gap. Now I want to see this drive straight through here. It's got to get through this candle's mean threshold now and start running these lows out and start digging down into that weekly draw on liquidity. So that would be the high yesterday. We should see, I'd like to see this continue down for the rest of the week now. Wheat, we've had to finally have to return back to this old high here, or sorry, this old low. I'd like to see that provide a level of support now. Just start rolling over and coming back down. If we do eat through it, look for this candle here and that fair value gap. If we take those, then we're looking for market shift. If we get above here, we have a market shift and a break in market structure. Using this candle, look for support to run and take these highs out. So we'll see how that acts off of that candle. Now we want to see this start to pull back. So far, sugar's keeping its high open here. I'd like to see that start climbing higher now. And I don't want to see this fill. I want to see that just stay open now. That's actually a buy. I'm going to go with a buy on that. That's in a perfect position for a buy. My stop loss down here. I do not want to see that. If that gets filled, then I'm definitely out. That one's broke above that high. I want that to be a breakaway gap now and continue going higher. Coffee. I want to see that come back into that fair value gap here. Get some support off this and go higher. So keep your eye on that level today. See if you get a response off of that. Live cattle, we're talking about, will it close above here, or will it just get a reaction off of this and continue going lower yesterday? So today we opened up right on the consequent encroachment and started pushing higher. So if we can get through on a close above here today, or if we just close above this fair value gap, you see that close tomorrow, reverse down, give us a first connection with the high, and then start running back up into this fair value gap here. If that closes above us, look for support off of this order block to go higher. Cocoa off the mean threshold or the consequent encroachment, and we're looking for this to we're still inside that, so we got to get out of here before any significant levels. We've just come back to hit the high of it, so we filled it. We're going to come back down to the bottom, find support off of it, keep going lower. Oh, we got nothing out of lumber, so I'm going to see lumber come back and get me in here so we can go lower. Lean piggies, not really doing a heck of a lot here. Yesterday finally closed below that low. I think that's what it was. Nope, we're still sitting on it. Gold. High taken. Don't get the first one, wait for the second one. Don't get the second one. Wait for this big order block here to get taken. Finally trades through it here. We're back into it now. So that's the level and you've shaken out these lows. So watch this level right here. If we get a resurgence in gold, like there, if we can get above that and this candle here, we're getting back into this range. So watch that level there and that high. So then you're looking for these equal highs up here. Oh, this keeps repeating. Small little imbalance right here. See that? That's SIBI. After taking that low, trade through it. And if it trades through this one here as well, that order block, and then get to the other side of it, you want to come back into it. Finally trade above it here. We trade all the way back inside it right there. And you want to go higher. If you took out those little highs, so watch here. So we're closing right on it. Wick's doing some damage, coming back to a logical level. We do have some relative equal highs above us. Let's look at this guy here. I'll give you this one real quick. I was looking at this yesterday. Wanted to show you that even on stocks, you can see this reversal right here. Traded through it. We come back to it right here. This becomes the breaker. Trade back inside that breaker. And peel away. You're looking for relative equal lows here. We've took out these equal lows. Return back into optimal trade entry. Now we're aiming for these lows and this imbalance down below us here. This is a fair value gap. See how we traded back to 50% of that? You want to see the rest of this stay open now and continue going lower. If you start trading through it, then we're looking for another run above this high back into this imbalance again. So I'm just gonna watching this one. Not that I'm buying this. This was just something somebody recommended last week or a few weeks back. Well, I guess it would be back in July because we were looking at that over here. Okay, there's the 9:30 open. Look at this. Looking for a run back up into here. Taking out those highs. Okay, well, that worked out good. I just took a quick little run on that for these highs. We've cleared it above it. We want to see if that continues going higher now. Or if we're just going to retrace all the way back. Turtle super here, right? Right back into this breaker here. We have this high and low. So we have a low, a high, a lower low. Take out these lows. Trade it all the way back to that. Come back inside this fair value gap here. Good morning, Joe Mack, and good morning, Mr. Derek. How are you this morning? I'm just managing to work my way through another 4-hour video of Michael's, like 3 hours and 59 minutes. So I'm at 3 hours of the 350 or 349 one. So like another 49 minutes of that video. And I'm making a ton of notes. So he's got some really good stuff in there. Yeah, I'd like a discount inside here. So this may be just the level all you get back to here now that we've taken out this high, just coming back inside it to go higher. We'll see where this level here is supported or not. It did come back into the 4 hour for August, but it'd be interesting to see what it does here. I don't have a bias. Do you, D? I'm not sure if I have a. I don't think I do have a bias. It could. We talked about it this morning. There's so many potential places that could run to. You got lots of equal highs and lows. Yeah, you got 4 hour equal highs. I wouldn't want to see that fill in above the SIBI. I'd like to see that SIBI get filled in because it's still not filled in on the 4 hour. 7-11. We have already made jagged just below us, but then we have more equal lows below us at 445 on the 4 hour as well. So we're stuck kind of playing around in here going, which direction is it headed? See that little fair value gap down in there? Is that little fair value gap? Have a look at that. No. See, I'd like to see it because we're equal with yesterday's high. So if we can get through yesterday's highs, like we got relative equal highs above us, we've already made jagged below us. So all I can see, we've already had the mean threshold of the hourly candle. We might just take these lows out here and look for there's a little tiny imbalance on the 1 hour, 541. So I'll look at that. %of this wick. We get a reaction off that, so we'll see what kind of these lows taken. Watch right here. we've got this breaker here, takes out that high and that high. We've traded back inside it here. So it looks like it wants to go lower. Watch off this candle here. So we're coming back and finding support inside that fair value gap. We're not trading through it. Low swept. Look for 741. We just hit that rejection block right on the money. Watch and see if we trade through this again. Morning, Trader Vader. Russell, good morning. No sound. No sound. What are you talking about, no sound? Do we have sound? Yeah, I have sound. Check your microphone. Russell, in the morning, we have 4-hour low around 6. There, now see how we've traded above that. Quick rate on this. Now we're pulling back into that range. This is the thing we want to see get through now. We still want to see that close above there. Wicks don't count. And all they're doing is just going from that little discount array there to a premium array back inside this large one right here. Inside that range. So we just came back to it right there, tapped it, and now you're looking to go lower. Because we still have not traded above here with a body. See that? We just came right back to the edge of that there, clipped it. Now you're looking to go lower. I think I realized the market took that liquidity for the open, so I took the risk low. Good for you. If you mint, I like that. If you can justify it, you collect that little run. Yeah, I took that first initial run up to these highs here and closed out my trade right there. Just for a quick run. I got like $100 out of it, but hey, $100 is better than nothing, right? And now we have this traded below it. It's come, that would have been the objective you'd be aiming for. It actually took the objective out, came back, hit that. So now you're kind of stuck between, is it going to go lower? And we want to see this one trade through here on a body for confirmation of returning back there. But all this was just a run quickly back to that fair value gap and then continue lower. So that was the one that I wanted as my key level for a body to get above it. And all it did was just come back inside that one there. So that's the level right there that you're looking for. That high is taken. Look for the reversal. Body trades below it. Didn't quite hit it here, but you came back and hit it right there. But it took out those lows. So now we're looking for these lows to get taken out. So Derek was saying that there's something down at 506. You have these 4 hour. Oof, that's a mess. You got a low here at 561. I'm just about to take that out now. And we're looking at this candle here now. That wick. We'll see how we act off that wick on a 4 hour. Now I've taken these lows. Keep your eyes on that low's been taken. Keep your eye in here now. Come off of this one. Look here. We're just taking out the 1 hour low below us. There's a little one right here. We just took that out. Could be a good day for patience and seeing if you can abstain from pretty late in front of me wanting some action, so to speak. Yeah. Sounds good. Price went into the first fair value gap at 931. Mentioned in Michael's lessons yesterday. Yeah. Right through that. So keep your eye on 941. I like to see another fair value gap forming down here. So 940 to 943, or 540 to 543. Right here. So catching this reversal here, you have 626. You're already 80 handles into this, 70 handles into this. That's the imbalance taken care of. I just went into the first fair value gap heading for the breaker from yesterday's open. Well, we're going all the way down to the daily equal lows. Amazing if we do. Breaker's been hit. What kind of reactions we get off of this? That's as far down as we go. We'll watch this last hour candle close up here. Let's see where it closes. See it close above 54 here. The next 5 minutes, we'll see if it closes above 54. Where's this? That's at 50, 19, 5, 42, 5. Just gonna bring this here. Five, 1, 2. Gonna leave that there as the so we have this consolidation here. We've broken these old highs. This little high here, I want to see a close above that high though. In here right now, other than that imbalance that was down here that we've worked. And as what you guys have been saying, this overlapping confluence is like a breaker inside an optimal trade entry. One more minute. Let's see where we end up here. Take a run on this low one more time. Dig down into here. It's 10 o'clock. Didn't even notice that. Now I want to see this little fair value gap here become important for me. I see I start fiddling around with this one. Not looking to get through here yet. So far you're looking for continued support to go lower. This fair value gap here is finding support for you to go lower. I want to see it get through here and close above this. Ideally, you want to see it get above. Now that we've on this little run down, I want to see it break this high here and come back into this candle with these old highs. Those three candles really, and then start pushing higher. That will be the reversal I'd be looking for. 8 seconds. What's it going to do? It's closing right on the bottom of it. Well, that must have been a trade. That must have been this one over here, right? Stop loss order. What are we looking for? This to go lower. Take that out, come back to it. That might not have been there. Oh, that was probably over on one of these. Still have not taken that out on the upside. Looking for this level here. This wick, look for 50% of this wick. We're trading 75% of that wick. So looking for lower prices now. And we're just starting to dig into that 1 hour wick. We traded below the 50% of that. Another little area of interest right here. You notice how we don't trade back through them with a body. We wick into them. Haven't got confirmation you're going to go lower, higher yet. We're back into a wicked situation. Same thing repeated here. So for me to get a little more bullish, I want to see this high get taken right here and use that candle for support, as well as this fair value gap as an inversion. It bounced off the 4-hour fair value gap. We did close above 554 on the hourly. So that's the, mind you, that's right down to, it's being eaten up now. I was hoping that we just get a close out on the hourly candle, last hour candle, closed at 557. And I wanted to see it just come down, tap out half of that wick, and then just start ripping back up again. But it came all the way down to the rejection block. Hit the rejection block. And now we're trading through this one. I want to see some support in here now. And I want to see this one give way. And I want to see us get above here and here. I think No, and I want to see a significant candle start pushing through that too, not just little wicks and stuff. But right there now, I'm slightly bullish over bearish unless we get below there. So you see how it's using it as support. You want to see it climbing out of there. I'm banging around between these two right now. Inside that range, this is like a discount, but they're both SIBIs. I want a SIBI and a BISI. There's no BISI over here either. So we get below this, then you're bearish again. Yeah, see how we're below it. We're using the other side of it. If we bounce around inside here for a while, again, my thoughts are I got to get above here and that high to get a little more bullish. And if we still remain below that SIBI there, then bearish. Morning, Dave. It is, sir. Choppy today. Agree there. So, is Michael doing a video this morning? I'm not used to having 22 people in here. See how that level there, we've been working it like crazy. I want to see a big bull candle get through here. We've got above it again, found support at it here. Have to start stretching this out a bit more. It starts to get really clustery in here, but keep an eye on that. It's kind of like when the people take a cup or the nut underneath the little ball in the cup, and they're moving them back and forth, and they're trying to take your eye off the prize. Stay on this level. Keep your eyes on the prize. The nut is under this, fair value gap right here, or the ball is under this cup. This is just zip, zip, zip back and forth. We're still looking for supports off of these key levels for me. So now we've got support there. See how it came right back in the fair value gap again after closing above that. Now this has been worked. Let's get out of here. Get out of this one here now. This has been worked multiple times. See how that lower half's been chomped, and we just get rejection off of the 75%. Like if I take this sucker here and just really blow it up and pull this in here, and you do quarters in here, look at this, right off the 75% level. Coincidence? Just some random candle heights, you think? Wicking through again. This candle's 50% of its wick. We traded below it again, back to finding support at it. Welcome to your consolidation. Premium discount, premium discount, premium discount. Like, look at the range here. So we keep running into the premium level. There's 50% right there. Premium discount, premium discount. Inside this little range here. So you're right around equilibrium. And look where our fair value gap is here, right on equilibrium. Right on it, just above it. So we keep dropping into the discount, premium. So we got to bust out of here somehow. For me, you got to bust about here to go higher, or drive down here and push lower. Get through 50% of that wick and look for lower prices. But the ball is under this cup. One tick. That's some accuracy there. Abs. Morning, Abs. There we go. They're spinning the cups. Come on, get above this level. Now we closed above it again. Now, do we need to see it come down here some more? Or do you want to see it bust out of here? Again, we want to see it take this high, have a break in structure. I want to see a big pounder come up here and then back down. This would be like a consolidation cam model entry 1. All the way back to these candles highs here. That's what we want. Push on, my friends. If this closes in 9 seconds above here, the ball is under this cup. So now you're more, look at that, literally closed inside it again. So you're up into the premium array. You want to start still seeing it climb out of here. You got a little fair value gap here. Now we've taken these highs. Watch here. I'll mark it out for you just so you can see. So always look at these fair value gaps here. That's the one we want to see. We want to see it stay open and price continue to climb higher now. This is the one we want to find support off of. That's the little key area you want to see it stay open. That's the 16 candle. That could be your silver bullet entry for a long, I don't know. It's too clustered to make any. See how we keep closing literally on that high. Yes, I know. And we open on the high and push higher. This is 16, 17, 18 candle. You go into 21 candle. So you're looking for that potential silver bullet run back into here. I'd like to see it stay open, and I'd like to see us get above here. So just watch this level here. This is the 19 candle. Morning, Hans. Oh, there we go. Literally, I love it. Now we've closed above that level, and I want to see a body get above here. Don't take your eye off the ball. All right. Now should I be hopeful? Should I be hopeful for gunning for old highs now? So we were right off the rejection block there. Right off the rejection block. We have not got a body above here yet. But if we do get another little tippy-tappy on that, if it drives through and hits this here, there's your silver bullet long. And wick, I don't like wicks above this. I want to see a body get up there. This highest body candle, I guess you could call this one the anywhere inside here for long. It's way too choppy though, hey? Nothing clean. Dixie breaks, so yeah, NQ is skyrocketing. I wasn't even looking at Dixie. I wonder if those other things we look for confirmation just confirm where the ball is. Right there. Watch that now. Now you want to see that just get out of dodge now. We've come back to here. Oof. Big dig through. Not got a body above here yet. Silver bullet people right there. The stop would be down here. If it ran that, if we start getting through, closing through this again, I don't want to see this high get taken and this level be the one we use to go lower. You want to see that, just the silver bullet to go higher now. Wicks do the damage. Order block's been validated. Trader below it here. We're coming back to it. Eat through this candle. You don't want to find support off here and start rolling back down again. Yeah. Your boss just said he liked that fair value gap. Turned it. He likes this one. Well, we've been liking that one for a while, so that's good. It's nice that the boss agrees with us. Look at that silver bullet run. So far it's panning out exactly as we were talking about, what we wanted. The ball under the cup. We talked about these levels and we're getting support. We did talk about it coming back into here or potentially here. It did, ran through it a little bit with a wick, and now we're continuing higher. So I think we got what we're looking for. We got a body traded above it right here. See that? And then what did it do? It came back and tapped it perfectly right there for an old high continuation. Woohoo! Well, it's nice to be able to call that as it's happening. Stay on there. Don't let the ball get lost in the shuffle. That's staying on price action, staying on the horse, my friends. Oh, I don't want to be a mentor. That's Michael's job. Luck be a lady. Now we want to see it get through here. Now are you looking for this fun stuff up here? Are we looking for some? This is the premium array. Inside this larger range, I want to see it get through here because that's internal range liquidity is between here and here right now. So I want to see it climb above this. And that's that foothold Michael talks about in terms of here's the rocks, here's the rumble jumble, right? We want to see a body trade above this old high. That's our consolidation. I talked about this as a consolidation. If we can get a big body above that, come back to the top of the consolidation, CAM model 1 entry for a continuation on the upside. And we want to see this. If we see this get taken, then I expect this range to get taken, these equal highs, and get back into the premium array. Our discount array is right here, and that's our premium array. So I want to see it come up to here, the base of that, and then start working that. So you may see it hit this, take out these equal highs, and then come back into the range a little bit, maybe back into this 50%, depending on where we are at 10 at 11 o'clock. And then start gunning for these highs because we got lots of liquidity sitting above us here. So Derek, we're cheering for you, buddy, because I'm on the same page as you. I want it to keep going higher as well. Yeah, you were right on that, brother. Well done. That's my French version, brother. You make trading sound interesting. That's why I like to watch you. I find your calm demeanor very helpful. Well, that's why you don't see me chewing my fingernails off. And I still got this little sore on the end of my nose, so I am not showing you any videos of me until my nose is repaired. Every time I go out, people look at you, and it's like that Austin Powers one where they go, moly, 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 moly. It's like, well, what is that on your nose? You got something on your nose. You got ketchup on your nose. It's like, no. Oh, Abs, that's exciting. That's exciting, buddy. I agree, Abs. I totally agree. So you see how we get this body traded above and we're coming back to the consolidation. And now you want to see this pushing higher, cam model 1. And that cam model 1 could come all the way down into here, which is also the fair value gap here. That'd be cam model 1. Cam model 2 would be somewhere back in one of these little fair value gaps, which we don't want to see get hit. We just want to see a cam model 1 and leave. It'll be too choppy for anything else. Are you still in this run up there, Derek? I hope so, buddy. I want to see you get rich today. Look at that bouncing off of there. Look, be a lady. I must be the only one that got stopped out by 2 points on a wick. Oh no, did you? Did you chase your stop loss up too tight? If you're looking at this range here, and if you're not, and that's not, I don't want to be accusing you of not understanding your PD arrays or anything, but if you're looking at your, I see what could have happened. If you're using this method, whereas if you get in down here off that level, or if let's say you got in off that perfect little silver bullet entry right here, if you got here, you got a little bit of a drawdown. Stop loss was down here, like I'd mentioned. And if it starts to run up and you hit 50%, take half your trade off. If you're trading inside this range here, take half your trade off. Move your stop loss to break even. If you go up to 62%, move your stop loss to 50. If it gets to 70%, take another portion off, move to 62. And if it gets to 75, move to 70. So you got 70. It came back and tagged you out at 62% if you're using that method. Now, if this rolls over and comes all the way back down again and takes out these lows, takes out all of this stuff, you'll be so happy that you got a portion off inside that range. Optimum trade entry right there, right off of the optimum trade entry level. And that maybe you're just, hey, look, man, I'm one of those really passive kind of traders. All I want is a quick run back inside this range, and then I'm out. And you're right up to optimum trade entry. So this reverses on you, you'd be like high-fiving yourself, dancing around your house like a peacock, because you went from here to that level, optimum trade entry, and you paid yourself along the way, and you didn't take any losses until it came back and took you out at 62%. So you made everything from that 548 all the way up to 583. So there's almost 40 handles just on the close of the last 30% of your trade. So you made 50 handles going up, and then you closed at 40 some odd handles on the last 30%. So that's why you have to ask yourself, what kind of crazy trader are you? Are you a sniper, like a quick sniper? I'm in and out, or am I just gonna try and hit the long ball and try and grab as much out of the day as I can, and I'm willing to withstand all these withdrawals again. Now, if you could do what you could do is, if you grabbed all that and you were confident that you might get another retracement back into a cam model 1 entry, you unload your position. If you get taken out there, you load back on at 50% or reload back down in this level here. That's what I call buffering. It's not a Michael thing. You got a fair value gap below you here. You don't want to see this get taken out on the downside. So you see how we run right back into that fair value gap again. You get to load on again and do the whole trade over again. So stop loss would be sitting down here still. And if it does take you out, then whatever you made going up with your entry at that fair value gap again, the difference between there and there is minimal. You revisited that level again. So it's like starting your trade all over again. You paid yourself all the way up to an optimum trade entry. And so now we've traded below this. This is what makes me uncomfortable here. Now we've traded below. If we get below this, then we're going lower. I don't like the fact we've already traded below that. That's already a get out. Get out of the trade. Optimum trade entry. Perfect exit right there. That's why you use the fib tool as an exit. There's your second opportunity to get on there long. Stop loss is down here. If it gets back to 50%, you move to your stop loss to break even again. So you've made all that run up. Now you're going to make all that run back up again. But you want to get through this level here. So if that's hitting 50% right now, you're at break even, take half your trade off again. So you got to collect all that going up 50 handles. And now you've got this one coming up here, collecting another something, and you're at break even. You're at zero stress trade right now. And there's a risk of it going lower. We got to get above that fair value gap and that one there to continue going higher. Oh yeah, I still have one on for 596. 596. Midpoint of that imbalance. Oh, you must have just hit it perfectly then. Consolidation. I trailed mine tight on purpose. Still bullish, rolling over. Hi, how are you? Oil and gold tape reading. Thanks. Okay, I'll have a look at that in a sec. Yep, I was stopped out. Fib retrace looks bullish. Yeah, frustrating. The move worked. The timing was off, I guess. See how we're below this level here now? So this is the thing you look for here. So we traded below it. We came back inside it right there. Hit it with precision. And now we're trading below it again. I don't like to see that. After taking out some little highs here, we get back to a CAM Model 2 entry, which is what we're talking about and didn't really want. CAM Model 2 will put us right here. If we have a body trades below that, then your stop would go down here. I want to see some legs get out of here now. It's nice that we got a nice buffer here. Back to a revisit of your stop loss. So Derek, what an awesome trade. If you got in on your silver bullet entry there and got out at the midpoint of that at 56, I think you were looking for. So it's just slightly outside of your range. If you were going for the midpoint of that fair value gap, you nailed it on the Beezer at 50 or 75% optimum trade entry. Then look for, oh, I didn't see that little guy right there. That's my bad. I didn't see that one. See this one right here? Trade below it, come back inside it, then you trade above it and you wait. Comes back to it, through, wick, wick, wick. then finally blast through it right there. We have another one here, and that breaker. If this breaker gets traded to on the downside, you're looking for lower prices, and it's just got traded through. The mean threshold was totally gutted, so you're going lower. That's why you look at that optimum trade entry, pay yourself on the way up. Those who would have made money off of this little piece here, right to 75%, you would have made your chunk of change out of that. And if you got taken out here, whatever you made in that for reinvestment in, if you got your 50%, I just want to show you this because it's important to see how that fib tool, and it's about what kind of trader you are in order to use your fib tool. Let me move it right along here. Your trade was in here, silver bullet, run up 70%, optimum trade entry. I've already explained how you trail yourself out of that. It comes all the way back into here again. You load your trade on again. It makes it all the way up to 50%. You take half your trade off, move your stop loss to break even, and you're just over 50% there. You move your stop loss to break even, it came down, took you out. So you got another half off of your trade from here to here, just inside. Once you go to the top, twice you go to 50%. Using that rule of 50%, take half of it off, move your stop loss to break even, comes back, takes you out. You realize you're on the wrong side of it here. And away you go. So now this becomes inversion. See how that, the level, the key silver bullet level we were looking for, it traded through it, came back inside, perfectly filled it again, and now we're continuing lower. So even though you're on the wrong side of this, you still collected using that fib technique. You're short of your take profit. That's frustrating, Derek. It was just, you're so close. So 50% of this wick right here. We are through 50% of that wick. So looking for lower prices, look for that low to get taken now. I got nothing on this side forming here for a reversal yet. So further downside prices, I guess. There we go. Continuation. Finally pick out those lows. So now we're looking to dig into this. I've got this level right here, right? This is the 50% of the wick on the hourly. Look for that. That's 25%. UDL target. Previous day's low, that's sitting at that 19,445. That would be where we're beginning for. We've got to get through the 50% of that wick. But yeah, that'd be where we're looking for it to run to. Oh, Christoph wanted me to look at the gold. Gold took out this high. Look for this candle here. We traded below it here. Ooh, I don't know if we came back, tapped it. What's the low on that candle there? 5,468. High on that candle. 5,468. The close on this candle. 5,466. See, actually, this traded below that level. Then it came back into it, tapped it right there. Literally tapped it and then left for these guys here. It would have to get above here, Christoph, to go higher. Ideally, I'd like to see it take out that candle, find support off this candle to come back into this range. Look for 50%. You have to get that in a discount array. So you want to see a body trade above that, come back inside here for a discount portion to run back up. Use your fib tool like we showed on the previous example. And then you'd be running for these lows. Otherwise, we're running back up into this range based on that level and that candle right here. What else did you want me to look at? Oil. I haven't been watching oil lately. Ooh. The 1 hour oil. I'll bring this over here so you can see it. You want to see this piece stay open? This is the daily on oil. So we've come all the way back up to this imbalance in here. We've come up to the premium array on the daily, this one here. Traded back into that imbalance, which is nice. You want to see it retrace back. Now, we've already gone through consequent encroachment. I'd be looking for a reversal to happen during the consequent encroachment, which is right here. So you look for a reversal. There's your reversal on the 1 hour. See that right there? trade back inside it right there. You wicked all the way down to the rejection block. Your stop loss would be sitting down in here, and you're looking for this to climb higher now. That's the reversal you're looking at during the consequent encroachment of this BISI. You don't want to see it trade back down there again. So if you revisit that low, then you're looking for this to fill. On the 1 minute chart, keeping in mind the higher time frame premise, we have equal highs here, we have relative equal highs above us, and we have a fair value gap sitting up here. We have old lows, session opens, those midnight candles. So I like to see it come back, find some support off of here, and then start pushing higher. You don't want to see us lose this candle on the downside. If you lose that on the downside, you're coming back inside here. Now here's an example right here. You see this, where you see that fair value gap on the 1 minute chart in the consequent encroachment. You look for the reversal. We saw that on the hourly right here. Look at this. Here's the reversal. Body trades through it and through this candle as well. When you get one candle going all the way through the fair value gap and the breaker that initiates this run below this low, on one, you trade back to the breaker. Here, you hit it, running for equal highs. You take the highs, or you run for inside the range, 50%, 62%, 70%, blah, 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 using all that again. Okay, that method for the fib tool, if that's blah, 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 that's a very technical term, by the way. But you get the idea, right? So watch for this on key levels that you're looking for that are supporting this move here. Consequent encroachment, you want this to stay open. You don't want it to fill. You want it to stay open to get bullish. That's more bullish if it stays open. You look for the confluence, 1 hour, the lower time frames. You look for this, it hit it, and we're getting a nice reaction off of it. Then you go down to the lower time frames and say, can I still, off this level, dig down into, is there a reversal that I can get in on right there? I can get in off of this and start running back up with a higher time frame idea that I want to run for higher levels, either your hourly, whatever your trade plan is. I'm either trading for equal highs, old session, so I'm looking for that to go higher, and I'm looking for it to take out these old highs here and get back into the top of the daily fair value gap at 75.95. So that literally puts you on top of these highs here. So look for 75.95 for your upside. I hope that helps you. And we're looking for those, looking for that previous day's low. We talked about the reversal. We talked about the 75% optimum trade entry inside this range. We talked about how you could have made money being on the wrong side of this, and then how you can correct it when you're on the wrong side. You see it trade through. You want to get back in sync with the market again. If you're on the wrong side, if you didn't take this or you took it and you got offside, here's your offside marker right here. Foul, offside, trade back in, get your opportunity, and you have the perfect entry to get short right at that level right there. Because if you're wrong and it trades above it again, then you're going back higher. That's the ideal short. So you sit there and put your stop loss above. If it trades above, comes back to you, you get an opportunity to break even before going higher. That's the fail safe that I taught you in one of the videos earlier. It's not a Michaelism. It's just something I figured on a fail safe. That's all. So that's the tipping your hat, change direction. The boss says, hey, look, I've broken these guys here to the upside, and I'm coming back and I'm getting ready to take them all out again right there. Comes back up inside and then continues through, takes the lows out. Now watch this guy here and that guy there. You don't want to be caught in a bull trap here. You got to clean this one out. Get a break in structure with that. We've now closed above it, right there. See how we hit 25%? That would be weakness, right? We hit 25% of the wick on the, oh no, we're through 25% of it. Where are we at here? Oh, there's 50% of the wick, remember? So this was 25% right there. This is 50% right here. We're getting some sensitivity off the 50% level. Remember, Michael says if we trade through it, and we're just finding some sensitivity there right now. So this could be a bull trap here. I want to see it break that here. Even though we've just come above here, I'm more bullish at the moment. I'm slightly bullish until proven otherwise. See how we just tapped it right there? Let me get this thing out of the way here so you can see I'm not overlapping multiple different so your eyes always have to be looking for these things. See how we traded above it, come back, found support at it. Now are we going to start driving higher? I want to see that candle there for confirmation to go higher. Otherwise, if we trade back through this and get support on the bottom half of it, that's a bull trap. When they're that close, I look for that guy there. When you've got this fair value gap and that breaker that takes this low out, or order block here, if we don't get a trade above that, then I look at that as a bull trap. See how we're trading below it again? Now, if we're just wicking into here and then it just takes half that wick and then starts coming back up again, we're in a consolidation pattern that they're shuffling around the ball again. Keep your eye on the ball. Keep your eye on the cup. Look for key levels that you want price to act on. Like we talked about up here, we talked all through this. We waited and waited, said what we were looking for, got what we were looking for. Then we saw, oh, it's reversing on us. And we saw the bull trap. We talked about the bull trap. So if you were wrong, let's say you did go long there, you came back and said, I'm going long there. The ideal long is right here. Because if it trades below, you go, ooh, I'm on the wrong side of it again because I got it closed below that level. Came back, gave you an opportunity to get your trade off at neutral before your stop loss gets taken. And now we're approaching 11 a.m., right? So I'd like to see 11 a.m. take out that yesterday's low at 441. And then we're looking for a reversal below that low. So keep your eyes on that yesterday's low at 441. Put it down here so you can see it at 441. That's yesterday's low. I want to see that taken out and watch these little fair value gaps that are forming here. So you're already starting to think about what's going to happen in the future. What do you anticipate? If this is algorithmic, we want to see these same kind of setups happen every single time, right? These fair value gaps that it starts saying to us, hey, look, I'm going lower. Hey, look, I'm changing my direction. This guy here, oops, that's a snooze. And there you have it. You've taken out the low. Now we're looking for these fair value gaps to form, right? We want to see that reversal. And we look at this one and saying that's that upward candle. We want to see the break in structure. So you're already starting to anticipate the structure as it's happening, as it's unfolding. You want to see it. You want to call it. And then you want to start saying, okay, that's that big upward candle I'd be looking for. If I was missing this on the upside, going back up, that would be the candle I'd look for to get support to go higher. So I want to see this either keep driving down, take out those lows, and start really heading for some other beef. What's down there? Those equal lows have been taken out. So we have a new week opening gap that's sitting right at 405. $405 is our next objective. Now we've taken out those 4-hour relative equal lows, waiting like a sniper. You're loading your bullet. You're putting your crosshairs right in there, right in here. We're looking for our little. So if you're in this trade on the way down and you're looking for, so here's an example. If you got in on this for a short right here, okay? This is the Crazy Ivan. I call it Crazy Ivan anyway. 1030, there's your 1030 candle. The Crazy Ivan, if he sees you, he's gunning for you. Takes through that out. If he doesn't, you always see this little turn back after 1030, around 1038, 1030 to 1038. There's this little look back. And if Crazy Ivan sees you, and there's you're trying to be all quiet right behind here, he sees you, comes back, he's charging on you, right? Reversing. It's a silly reference, I know, but it's the Hunt for Red October, bottom of the hour. So anyway, here you see this, you take this trade. So now you want to go in it. Here's another way to manage this. So if you're on your way down, you're saying, as soon as a low is breaking, I look for those little fair value gaps. If they take them, my stop loss gets trailed down below it. So you're either using, because you say, well, if I've fully extended past the range and I want to continue holding on to this, how long do I hold on to it before it reverses and I'm at the low? Well, just keep trailing your stop loss, that fail safe, all the way down. There's your stop fair value gap. It doesn't come back through it, so stop loss would sit here till the next one forms, which is right here. And you go, is that the bull trap? I want to see it take that out. So my stop loss would be sitting up here. It doesn't take it out. The bull trap may have caught somebody on that reversal. If you're just using that fair value gap without looking at logical level of, you want to see market structure break. It didn't. So you're trailing your stop loss to here. Wait for the bull trap. It didn't. Carry on. There's the next one. So your stop loss is sitting above here. Now it's sitting above here. So because they're logical levels, if it breaks through them, you go, okay, that's going to the upside. That's the reversal. So you're using the opposite side to manage when you want to get in, when you want to get out. Because when you want to get out on that one, you want to get in on this one to go back up. So that's how you can get really good at trading from one direction to the next, back and forth. I know it sounds easy, but watch it, test it. You'll see. You'll see that that method will hold as well. Or you can do your fib extensions and go for, you can go for 4 levels down, which is right here. I know Derek likes to use the 2.5. There's your 2.5 right on the money right there. And then your 4 is down here. So if it reaches for 4 and 4 is right at a level we're looking for a new week opening gap, that would be an objective to reach for as well. So you can use those fib projections. There's multiple ways you can manage it. And you can see like that would be my downside objective. If I hit it, I'm done for the day. You've just hauled another 55.60 to here. That's 150 handles from there to there. Remember you caught all these handles on the way up. You see this reversal happening. You get on the right side of it again. I was looking for long. I got on the wrong side of it. Get in sync with the market again, and you haul another 150 handles out of it. So if you even take a loss in here, you're back in sync with the market, and you're looking for this guy to get taken and that guy to get taken. So your stop loss would be sitting somewhere around in here. And if you hit this, you're in profits anyway. It's a zero stress trade for you. So it has to clear this out on a full body close to run back into this range again. Back to here. Your optimum trade entry reversal. So keep your eyes on this little area here. %50 sitting right here, 62%. We don't have an opportunity to get in on something here. So watch the 50%. So ideally, you want to see this high get taken out here before resuming back to a bullish stance again. You want to see this one get taken, find support at this, push through here. There's your final confluence that you have a break in structure to the upside. That candle needs to be taken out. Otherwise, we're just trading internal range liquidity right now. Now there is another one right here. See how we treat it back inside it? Right there. Coming into 11 o'clock. There's the 11 o'clock. So if we take a run right to that optimum, well, not optimum trade entry, but the new week opening gap right here, and then see a 45 or 50 to 62% retracement back into the range it was created since 9:30's open, that would be a nice little looky-loo for me anyway. I like that idea. There you go. Boom, hit it. That's me out. I just closed mine out there. It can do whatever the hell it likes now. I've just hit that weekly objective. Done. If we start digging into that weekly more, as you can see, just as I get out, it's still running. Why not? Why not? So we did not get above our level. No bodies got above here. There was nothing in here that said we're reversing. We didn't get an optimum trade entry reversal back into here. It just continued going lower. So who's got another downside objective? What's the next one? I'll tell you what it is. What do you guys got for your next downside objective? I'll see if it's the same as what I got. I'll give you guys a second to tell me what it is before I give you mine, before it reaches my objective. Anybody got one? Anyone? Anyone? No one? Okay, I'll give you my one. Right there. See how if you're still managing that from the above, the upper portion, and you didn't get caught in the bear trap, and you still haven't got this upside taken, you're still in your trade. See how that's like 569 all the way down to where we're at right now at 369. There's 200 handles there already. And all you did is just manage the fair value gap inversions and waiting for that swing to happen, for it to tip its hand and start going in the opposite direction. You have a 200 handle, plus you nailed all the wrong side, the reversal, the Judas swing, so to speak, to take more buyers in and crash them out. You still caught all of that and then used your rules, following the rules and watching for, he's changing his mind. He's going to take everybody out right here, to start saying, I can unload my positions several times. Even here, you got cheeky enough to steal another few pips out of that from your entry to 50% using that fib method I showed you. And then catching off on this here for the short, and you're still 200 handles. up now on top of the 100 and somewhat 100 handles that you would have got, the 50 and then another 20 or 30 handles there. 46. Yeah, there's 50 handles there. So you have 250 handles or more. Well, actually more than 250 now. We still have not had anything break these yet, right? Nothing's broken it. So you're still using the reverse to keep you in the trade. It's literally trading both sides now. One side going down, another side going back up. So until you get confirmation that you have a change in direction and a break in market structure, you just keep riding this puppy all the way down. Now you got to have enough confidence to be able to hold on to that. And when you see those little reversals, how many of you got nervous and said, oh, that's going long again? We did not get any rule break there to say that we're going to go long and use this to support, to go higher. So you're looking for all these rocks that are forming. This is a scree field here. When I used to rescue people off of Yamnaska here in Alberta, and they used to do all this scree skiing all the way down. You're looking for this footing to hold on to, otherwise you face plant. It gets you caught. You think you're going to catch a ride back up or find your footing, and then it smears you down the mountain. You think it's bearish? Oh, I don't know where you get that impression there, Derek. I see bears now. Yeah. Where does your eye go now? Now I want you to kind of look at this level here and tell me what do you see in here? What do you see in here? And where would you consider that bullish? When you go bullish, let's say you wanted to head for these highs again, what would you need to see to confirm bullishness? To trade back inside this range for optimum trade entry to go shorter, you'd want to see how we've got 3 fair value gaps now? And watch where they're all situated. This is the range. We have a discount, a premium, and an equilibrium. Watch when I pull my fib tool on this, you'll see. If that stays where it is. See that? That's the 50% right there. So if you're trading back inside the range, you want to see this get above here, find support at this, and start trading 50%. You take half off. You're trading back inside here, 62%, blah, 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 if it goes through this. And then you wait. So you've taken some money back on the retracement, and you wait. If we trade above this fair value gap here and clean this high out, we have a break in structure. We use this as support to go higher. So otherwise, we're just coming back inside this range. That's how you trade inside this small little range. When you see 3 fair value gaps in there, look for where the middle one is. If we trade this one, that one's the footing to get to the next one, to get to the next one. Now, if we extend it beyond that, that extends the range. We're looking for a body to close above this one, push higher. You want the extra confirmation, look for a break in structure. Body closes above, comes back, finds support at this breaker right here to go higher. Otherwise, this level here, all the time we're bouncing off of that, we're going shorter. So right here, you're looking for a run back into the liquidity. So if you're trailing your stop loss on this huge run down, that's the level you want to say, my stop loss is sitting right there. If it trades above this on a close, and the wick may still get you anyway, but if it starts to trade through this, and we're talking a body, not a quick wick, you've got your run all the way down and your stop losses. You're looking for this to get taken to the upside. So if you're trailing this as a stop loss and you're watching this, you're going, there's my reversal, and we've got equal lows happening here now. So you want to see something really distinctive break through, and this right here is the consequent encroachment of that new week opening gap. If we bounce off of that, get a fair value gap, and then start coming back up, climbing through these, that'd be awesome. But if you're trailing your stop in here, you're watching for this to happen, because this is where you're saying we're going to trade back inside this range. You may say, well, that's going to be my ultimate stop loss, but you're going to lose 49, almost 100 handles right there. You may say, no way, man, I'm keeping that tight. I'm not prepared to lose that, because we may be just coming back into here and then continuing down again. Well, if that happens, I'm watching inside here for another opportunity to get short or another opportunity to get long, because you're constantly watching the ball inside the cup. He's not going to take your eye off of my prize. And I'm looking for an opportunity to stay in this trade or catch the new direction inside the new range, and then catch the directional change again to go continue coming back lower, if that makes any sense. But that's what we're watching. That's what this whole purpose is to watch price action, see if you can stay on the horse or focus on the ball in the cup, or whatever little analogy you want to make. Always keeping in those higher time frame objectives, like the 1 hour, 4 hour, daily. But stay in price action. This 1 minute is beautiful for that. I have a midpoint of the 4 hour fair value gap. I'm pretty much with it. The equilibrium of it, 325, 19305. Yep. 305-ish, 325, 322. I think it's bears. What do you think? I see bears. I'm a hard man to convince. Dow is saying no to me. I'm not going bearish. Dow is stubborn for sure. I like the ball and the cup analogy. Amen. Amen. Derek, you're always good for a laugh. I love you, buddy. So has it hit a level right now that you would be happy of saying that that level right there is a freeze me up and look for a reversal? And where would your reversal be? Where do you need confirmation? Where's the dialogue, the narrative that you want to see price do? And if it doesn't do what you say it's going to do, then like when we're calling all this stuff in here and it's not doing what we want it to do, then we have to reanalyze what it is we're looking at. If it's doing what we want it to do and it's reaching for what we want it to reach for, and then it reverses and gives us all these telltale signs, and you're calling this or you're talking about it as it's happening or just before it happens, then you've got a pretty good understanding of what price action's up to. So, or what it's performing the way you want it to. You may not understand it. You may be pretty lucky at the moment, whatever. But talk it out to yourself. I'll get a consolidation here now. I'm thinking cam models. That's popping into my head. When I see this consolidation, I think cam models, and I think this here. I think this range. I've got multiple different things I want to be looking for inside that range and that consolidation, and a downside objective that is still in play for me. Anybody ever use that kryptonite on the indicator section? Watch here. This reminds me of that, the sand, those little volcanoes you build in the sand, and the ants when you're on the beach and you catch an ant and you put it in the volcano and you build the size up, and the ant will be running up the side like this and go and keep sliding back down on the sand, and then it will climb up and slide back down on the sand, and you try to build it as high as you could to see if the ant could climb out. Yeah, you guys used to do that, right? I never killed the ant. You just kind of roll it up there. You build it up as high as you can in the volcano, in the sand, and see if the ant can climb up. You try to build it as steep as you can and see if he can climb out of there. And this way he just keeps rolling, climbs up and rolls back down, climbs up and rolls back down. It's hours of entertainment with the poor guy trying to find his way home. Support, support, support. We're finding some resistance here, right? Watch this. So watch these wicks as well, and you think it's trying to get back down there, and it's finding some support, a little bit of bogginess. Now I want to see, there's the consequent encroachment. Just took out this little high right here, back into that fair value gap. There. Off this lowest body candle. See how we're finding constantly, we're finding support that's still holding us up. You want to see it climb on top of here, and we're getting back into this range. And don't jump the gun too soon, unless it's your trading method. You have to explain that to me, Abs. I looked at that, I was like, what the heck is this? I saw you'd mentioned it, and wasn't sure about it. So I popped it on as an indicator, looked at it, was like, what the hell's that? So you might have to spend some time with me, Abs, and talk me through how to use it. So watch, see how we're starting to climb into it, find support inside it. Watch, 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 watch. Keeping in mind, and again, we were calling this before it happens. It's the kind of talk you want to be saying to yourself. Find support at it, look at the 50%, and now you're looking back inside this range. And as soon as you hit 50%, start peeling off your trade like we did up in this thing here. Get ready for this to be the same kind of situation for another run back down. If not, then we want to see that confirmation break through the upside, giving us the idea that we're going to extend the range. Confirmation is a body above this, finding support at that, and continue pushing higher. Otherwise, you're going to, if you're on the wrong side of it, we'll see that we're on the wrong side of it. Once we see this kind of stuff forming again, after you take out little highs, this will form, and then you'll see, okay, we're on the wrong side of this again. So you constantly have to keep looking for these. See how the body hasn't traded above it yet? We're trading inside it. And you get this bouncing around above and below, like we saw over here. See, we already made new low, popping up, through, down, and then it finally got through it. And we wanted to see it break through here to get confirmation for an upside. This is just the same thing repeating down here, except that we have 3 fair value gaps to play with on this one versus just the two here. There was nothing in the middle here except this dude, which is an old one. See, we're literally close and open right near the sensitivity of that. So if we close below that again, don't get caught in a bull trap until you get confirmation. So now we've got a trade above the consolidation, CAM model 1 entry. I want to see that leave now. That would be a CAM model 1. See you later, Dave. All the best, buddy. So from here to here, 50%. If you close below 50% on a body and your stop loss is here, take out your trade first, because you shouldn't see a body close below 50% of that range. A wick can do a little bit of damage. There's nothing down here that would say that I'm looking for, there's no imbalance or anything that says that it should run down to that point where you should get a body below that. So just kind of keep your eye on that level right there. Oops. And you got, see how we traded below it again? So thinking you're bullish, getting caught in a bear trap, you want to see that, or the bull trap, you want to see that get above there inside that range. So far we're bearish again. Or you're going for a CAM model 2 entry for a long. So now you've got your 2 different things you need to see. Now if that you're a CAM model 2 long, you want to see that get above here, get some legs, and start going. Your stop loss is sitting right here. And for me, as soon as I break that high, I move to break even, because you don't know what it's going to do here. Let me just take this here, just give you an idea of what the CAM model looks like. There's the 50% right there. So you're going to go to CAM model 1 right now. CAM model 2 is right there. So your 1 is still in play. Get up there. You're out of there, Derek. Take care, man. Or are you talking about Dave? Dave's come so far, man. I just love how much that guy's learned in the last 6 months. He's got himself a paid account now. He's done so well. He's growing fast. Good to see. And he's able to feed himself now, which is awesome. Now, how many of you have the patience to sit there and just hold and wait for your opportunity to set itself up? Just watch the cup now. Watch them spinning the cup on you, trying to get it. Take your eye off the prize. Keep your eye on the cup. What do you see, folks? What do you see? Does that not get you excited or what? Come on. That's got to be exciting for you right there. You cannot ask for any more precision than that. You got to thank for the boys over at the lodge for creating the old support for us. They all got the vote in. The vote came in as we're going to go higher. We're going to stop price right there. We're not going to take any more volume. We're not taking any more trades. Thank you very much. And sorry, let me get that right to that level there. That's right there. That's right there. And the boys at the lodge slowed it down. So God bless all the boys down there at their lodge. Thank you very much for that. We're going to keep on moving this price a little higher now. See, there's the 50%. You move your stop loss to break even for your CAM Model 1 entry. Take half your trade off. Didn't quite get 62, but you're at break even off your trade here. Got a little fair value gap here. I want to see that stay open now. Come back, just dip into it. Is fine by me. I'll be all right with that, I would. I do have to go shortly, so we'll be bugging out soon. Yeah, I'm going to be out of here at in the next few minutes. I just want to see this 11 o'clock reversal back into 50% of the range of that was created this morning. See if that happens here. Let me make this a little smaller, make my job a little easier. That's the 10. There's the 930. 50% to take out these highs right here, let me tell you. Off you go now. 498. I've given you this run up. I've given you the reversal. 200 handles. Reversal. So if your trade was coming down, that's where the reversal happened. It traded above you here. That's where you close out that trade on the short. So from here, 50 or 65 to here is 386. So it's 180 handles or so. And now you've caught the reversal. Coming back up the other way inside this range, don't forget, because we could be just doing 72% and then slam it back down again for our consequent encroachment of that new week opening gap. Kind of keep those things in mind. Keep it all in mind, my friends, while you're watching. I don't know why I'm going with that accent this morning, but now you've taken out this high. Look at this fair value gap here and this one. You want to see, you want to see get below this and this, use this as support. Now we've taken it out, changed direction. So keep your eye here and watch this. We're stuck between this reversal going down and this one remaining and continuing going higher. And we're in the equilibrium of that range. Let me get all this back down here. The reality of it is right here. Let's stay in the reality. We've already gone back up to the premium inside this range. We've gone into the premium. We can just dip into that and then start going lower. So that's our area that we look for confirmation that that was all it was just a quick return to near 62% to continue going lower. That's where I'm looking for a change in direction, saying, hey, I'm giving you the hint like we saw up here. Like we saw right here. Guess what? I'm giving you the hint. I'm going lower. Give you one opportunity to get in on your trade and go lower. This is the same kind of thing. I'm going to give you one opportunity to get in on the trade and go lower. So we're just rinsing and repeating exactly what I showed you up here. We're just looking for that same kind of stuff over here. And we need that one to continue giving us confirmation. So right now we've come back and we've tapped it. We've got this little trick pony here, and we want to see, because they're so close, I want to see that structure get broken to the downside for confirmation. So a nice bold candle through that to come back in. Otherwise, I want to see this give us some support, and you want to push higher now. You don't want to see this waffling around here. When you hear Michael say, I want to see it get some legs now, that's what I want. I want to see legs out of here. I want to see some intention to push this market higher and not just waffle around in here and start lagging below here. I want to see this stay open for a breakaway gap. And if it closes in, then it loses its luster for me. Because now you're starting to look at that reverse. And if we lose that there on a close, that would confirm this one. And then that loss of a close there would be this breaker. See this little breaker here that runs out that high? That breaker is it. I want to come back, find support off that breaker, push, push, push. Let's go. Let's get some legs out of here. You know what I'm saying? $25 people. Man, got lots of 25 people in my office today. DeMilo, how are you? Yeah, see how it's filling it in now? Dipping its head. The wick. You just want to see it come back here. Wick in for a perfect. That's the perfect entry right there. If you were doing a long, the perfect entry would be right there. Because if you're on the wrong side of this, oh, look at you, lovely. Thanks, baby. Got my cup of tea this morning. I do love a cup of tea. Lovely cuppa. Right, we're finding some support off here now. I like it. I like it. I'm running around through different accents now in England. I'm excited. I have 25 people this morning. Other streamers could only wish for this many people. Ooh, and I don't mean sarcastically either. I enjoy having all you people in here, even if it's 25 of you. I think it's great. Thank you for turning up. So we did get a fill of that. Not so much fun, but ideal. So if we close below it, remember, see how if we close below this, then it tells me I'm on the wrong side. If it comes back up inside, gives me an opportunity to get out and gives me an opportunity to get short off of that one. So that would be the ideal entry there. There we go. Come on, give me some legs now, love. Come on in.
That's it, lovey. Come on then. Push it up. Let's go. Oh, la, 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 la. No, I'm not muted. I'm not muted. I'm still going. I hope I'm still going. Yeah, I'm still live. You guys can hear me, right? So I've got my cup of tea now. That's what it is. If I get my cup of tea, let me tell you, my boy, it's a good way to think it is. I'll think better with a cup of tea. Yeah, DeMilo, you've got to look for, you've got a, I'll type it in there. You can't, maybe you can't hear me. Going in, get up there. We've through the, see how we got that middle one now? So middle one, this Sibby here, I want to try and talk more like Michael. You notice this Sibby here. Ooh, let me get that Sibby to where it's supposed to be. That Sibby is in the middle of that range. So you got three different fair value gaps. I like to use the range and I like to look at it as premium and discount inside that range. And I like to look at the discount as a form of support. And I like the equilibrium to be broken. And I like to see that again climbing up on top of the rocks. And you're looking ahead of you. So if you're climbing up a rock face, you're looking to where can I hook my fingers in that next little hole to get some leverage to climb up, put my foot on that ledge and then start pushing higher. These are the holes that I look for. So I look for the rock face and I look for the holes that find support and I look for the breakers that will give me the extra support I need for like the leverage. Now that's the lever or the ledge that you want to climb up on top of to get some support at it and push higher again, right? You don't want the ledge to be a cornice that breaks off and you come charging back down again. So if you're on this trade and you did get back in here and you're using your fib tool as a method, and again, we've showed you this before, there's your 50%. So if you started your trade right there as it traded back into that fair value gap, we didn't want it to, but it did. If you got in right off of here, as soon as it gets to 50%, move your stop loss to break even. 62, move to 50 now. And if it hits 70, you move to 70. So we're going to pretend like we're moving our sticks up here so you get an idea what it looks like. Let me just move my sticks here. So my stop loss would be here. You take a portion off there and you're watching now. And we're trading internal range liquidity only here. So you've taken a portion off there. If it comes back and tags you out here, you traded from here to there. That's how many handles? 388 to 408. That's 20 handles. Michael talks about a 10 handle run. You've just got 20 handles off there. You're break even and you're already up an additional 8 handles. So watch, it has not come back to the 50 yet. We're just going to watch it here. Watch if it just shy of that 70, right? And I'll start pushing through there hard. You take another bang, you take another portion off there, move it to 60 here now. Right, oops. Move up to there. Let me get that back down to where it's supposed to be. Sorry, you're at 60. God damn it. Damn it. There you go. Oh, what the hell? I'm going to lock that in place here. I keep fumbling around with it. Let me lock it in place. Lock her down. Now we can move this. I gotta extend that a little bit more. Let me get this sorted out first. Come on. Okay. Let me continue on with my story. So 62%. Take a portion off there. You get up to 70. Now you move it, you're at 75, move to 70. You take a portion off, hit 78%. Right there, you're at 70% now. If it comes back and taps you, you've just made a whole bunch more handles. How's that? You've made 30 handles to there. There, it tapped you out. And that's optimum trade entry reversal inside that range. If it pushes through it now and gets to the other side of it, I want it to go higher. So those of you who cashed out right there and you got on this side coming back up, you've cashed 200 handles on the way down, plus that little piece we had on the way up. You've caught this reversal on the way up, and you've used the fib tool to eke out another 20 or 30 handles out of this. I hope you guys have enjoyed your morning this morning. I've given you almost 300 handles of price action here. I'm in on this on the way up. I'm just working this all the way up now. I'm going to watch this. And I'm at zero stress trade in this. So I'm just trailing my stop loss accordingly. So if that is the optimum trade entry reversal and this starts slamming back down again, that's okay. I got a little piece on the way back up as well. Now I want to see the body get above here. Come back, find support on this, start pushing higher. You want these to be the, we talked about these as the footings. I talked about that while we were down in here, that those are the levels of rock climbing that I was looking for. And so far you're finding the support. So if we can come back into here or the top of this order block here and keep pushing higher. Got it. My audio was off. It's I love an easy solution there, DeMilo. Glad you got your audio working. Got to go, DC, tomorrow. Thanks for the stream. You're welcome, Abs. Love you, buddy. Take care. Talk to you soon. This is my walk-off for the day. 19/4/29. Let's do it. Let's do it, Derek. You got it. 19/4/29. 25. That's it. Have a nice day. You're out of here, Derek. Love it. Love it. Good for you, buddy. Pack it up. Walking out. I'm taking out. I'm off here in 5 minutes. I just want to see if this trade pans out here. Oh, it got me. So there's the return to that order block we talked about. I don't know why I had my stop loss sitting right there. It's a logical place for it to come back to. And it tapped it. It tapped my stop loss. I was in profit, but it tapped my stop loss right there. Right where I was saying we could come back to. And now you want to see it. I'd love to see it come ripping through here now. Come back down. So I don't feel so bad for putting my stop loss so close on the very spot I was looking for it to come to. Now, you want to see if this range is going to extend. You want to see us getting on top of this here. You see how we just come back inside that range, the breaker. We're inside the breaker, inside the premium array, inside the range. Optimum trade entry reversal. We can continue on the way down for that level we're looking at down here still. For the same thing we saw up here, the reversal off the breaker. Do you see things rinsing and repeating? So now you want to see where does the level give way. So we're looking for a fair value gap on this side. And if we don't see it, then we're looking for a continuation on the upside. I want to see that really start getting some legs getting up here now. So you're coming into lunch hour. If we get one more run on this, the low created in the day right here during lunch hour, and then the reverse back up in here. If we don't get that old high, look for it to slowly start to degrade through here. I've got nothing. We have no old high here we've taken out. So I have no reversal set up right here right now. So I'm still thinking bullish. So I'd like to see that high get taken, and then you see a reversal. I'm all right with that. But this little high right here is where the ideal level is. I'm looking right in here. I'll put a little area of interest box here for you. See if we get a tap of that. There you go. You've tapped it. Now I want to see us get through that box and use this box for support. Now, hopefully you get to see exactly what we've been talking about here with the foothold thing. This is a great example of the foothold. You want to reach up for it, grab it, climb above it, get some support on it, get your foot on it, then start reaching for the next level. Reach up for it, climb above it, come back, get a foothold on it. Reach up for it right here, climb through it, find some foothold on it, and start reaching for this old high here. So I don't want to see this, just the consequent encroachment of this just get hit and then start reversing down again. I don't want to see that. I really like to see that pop through there. And we just coming close to the consequent encroachment of the breaker. Well, I like the consequent encroachment to be on the bodies, not the wicks. So that's the body right there. this is where it can reverse all the way down and come back into here. So you would have, if you would have caught this one here, and that's your upside objective, you're done. And you've caught a huge chunk down. You've caught this big run up in here. You've caught that huge run down here. And if I've showed you with clarity exactly where these levels, keeping your eye on the ball in the cup or the staying on the horse, whatever analogy you want, inside a range, optimum trade entry reversal, looking for the confirmation, getting your confirmation on the other side, and the climbing up of the walls all the way back inside the range. So hopefully you got to see something here today. That's going to be it for me. I hope you guys enjoyed something. You got some learning in today. Not that I was trying to teach much, but you get the idea of what I'm looking for with fair value gap inversions. If you can see that and you like what we did here today, just hit the like button. It lets me know that, like Michael says, it lets me know you appreciate what we're doing and you like what we're doing. And I will see you guys tomorrow on Friday, bright-eyed, bushy-tailed. Love you guys. Thank you so much for your support. It is much appreciated. And I will see you guys tomorrow. Have a wonderful day, and I'll see you